Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take through a key event I believe will be driving your markets in the coming days. Now, moving into this week, we've had these fears over trade protectionism, the US trade policy with regards to producing trade tariffs that are impacting and specifically targeting China are really causing ripples through the markets. Now, how China responds to these trade tariffs in the coming days and weeks is going to be key, I think, for market sentiment. We've already had a response to the aluminium and steel tariffs, but that is small beer compared to what we could see in response to the 60 billion set of trade tariffs that are specifically targeted at China. Now, according to Steve Mnuchin, the US US Treasury Secretary, we've had discussions between US and China around these policies, and exactly how the Chinese respond I think will be crucial, because at the moment we've seen a little bit of an improvement in risk appetite on Monday morning, but as the week progresses I think any more news flow surrounding this issue is going to really drive markets either higher or lower. Now, at the moment we've had a significant selling pressure coming through the dollar once again. Back end of last week we saw sterling higher, we saw the dollar yen sharply lower, breaking through key levels, and I think that this is going to continue to be a theme. The dollar weakness has continued on Monday morning despite this improvement in risk appetite, and that has certainly the potential to continue to go. Breaking down below 89.40 on dollar index is a key level to break, and 88.25 is the February low, which now comes back into play. Now, what we have got is not a lot of data actually this week. In fact, pretty much only tying up a few loose ends with the growth numbers from Q4 last year, but the core PCE is the key data point that markets will be looking out for. Last week we saw the Fed, which slightly upwardly revised its projections for core PCE going forward into 2019-2020, but its projection for 2018 was not upwardly revised. It's still sat at 1.9%, and at the moment we've had core PCE sitting at 1.5% for a long while. So any sort of upward tick would start to sort of get the flows moving, I think, in terms of the inflation story, and we could start to see a bit of volatility around that. So that is the key factor this week on Thursday on the economic data front. But generally speaking, through this week it's all about trade tariffs still. Now, in terms of FX markets, what we have got is the euro dollar, which is starting to gain a little bit of traction. It's been a bit of an underperformer actually, euro dollar, due to the fact that I think that we've seen the euro data starting to roll over a little bit, which is sort of it's been a bit of a drag on the euro in the last sort of couple of weeks, but certainly now we're seeing this dollar weakness. Euro dollar is starting to gain traction to the upside, so that is something to watch. In terms of cable, we've had positive developments in the EU transition deal for the UK, and not only that, the dollar weakness as well, so the double whammy helping cable higher. Dollar yen is pulling lower on the strengthening yen and also weakening dollar. The yen strengthening on the back of political uncertainty in Japan, ironically, actually drives yen strength due to the fact that anything that sort of affects Shinzo Abe negatively could well produce a less sort of dovish prime minister. So that's why that yen is strengthening on the back of that. Now, in terms of indices, now these are the key movers because we've had a sharp move to the downside on these trade tariff and protectionism concerns. Now, if we can start to see a little bit of an improvement in the prospects and maybe a little bit more middle ground being reached between the US and China, perhaps we can start to stabilise again. But in the absence of that, I think we're going to remain under pressure because the markets don't really know how this one is going to pan out in the long term. And if the US continues to act fairly sort of hawkishly in terms of trade tariffs, and also on foreign policy, but also hawkishly on trade tariffs, then we could see these equity markets continuing to sell down. Interesting to see the European markets have found a bit of support on Monday, and there needs to be a lot more done to the upside to start to really turn this outlook around again. But certainly at the moment, a little bit of improvement, but as the week progresses, I think this trade tariff story has got legs to run in it for these equity markets. So trading around equity markets, we need to keep close to those trade tariffs. And into commodities. Again, the dollar weakness plays well for gold, so gold pulling higher on the dollar weakness. And also the safe haven flow as well has helped gold there, so gold breaking out above 1341. Now, inflation, as the week goes on, inflation will be key. Is the US ready to start generating inflation? We'll look at the core PCE. That could produce volatility for gold as the week progresses. Also, in terms of the oil price, oil has started to tick strongly higher again, testing those 2018 highs. Just pulling back a little bit, but still the potential for further tests to the upside. Can that continue? Well, we've got more sort of talk about around the OPEC production cuts, volatility around the EIA oil inventories, and anything that affects global growth, i.e. trade protectionism, could be a negative force. So, but interesting market to watch is the oil market. So, as I said, in terms of the economic calendar, we've got a few loose ends to tie up. We've got some pending home sales. We've got GDP Q4 for the US and the UK. Slight revisions perhaps on those, but nothing really for the UK to be concerned about. But the main focus is that core PCE on Thursday. So being a shortened week as well, considering we've got Easter at the end of this week, it could be a little bit more quiet, but as I said, more focused still around the trade tariffs. So I wish you good luck in your trade this week, and I'll speak to you again soon. Thank you.